So this is the document typically used when submitting an offer for a buyer. And we're just going to go through some of the key points. So this part here is asking for the seller's name, which you can get from the matrix MLS. When looking at the MLS, you can pull the tax roll by clicking the black TX here. And this is also going to give you the legal description. So when it asks for the block and the lot, let's fill that in now. So lot 12 and 13, block 1. And this extra little part here is everything else in the legal description. And then paste it here. City of, in this case, it's Huntsville. County of San Jacinto, and remember we're getting all this information from the tax record here. The tax record will have everything we need. San Jacinto County, there's the city, there's the zip code 77340. Then of course the address. When it comes to exclusions, these are things that are affixed to the property that will not transfer with the sale of the home. In the MLS listing, exclusions can be found here. There's nothing listed there. That means that the seller is going to convey everything that's affixed to the property. However, if your buyer doesn't want certain things that are affixed to the property to convey, they can list it here. Say surround sound speakers that are screwed into the walls in the living room. If the buyer does not want those, they would have to list that here. Anything affixed to the property that will not be transferring with the home. Here, this is where you type in the sales price. It's going to be, this top is the down payment of their loan, how much they're getting financed, and then total sales price. So if they are putting down $50,000 and they're financing $300,000, then the sales price will automatically calculate. And in this case, since there is financing involved, typically you're going to include the third-party financing addendum. Now, if this is a cash purchase, then obviously we wouldn't need anything in the financed portion. You would just type in how much cash they're paying for the property, and it would look like that. And since it's all cash, there's no need for a third-party financing addendum because there is no financing involved. This section is for if there's any leases currently involved in the home. So if it's owned by a landlord and they're selling the property, and if they have a tenant in there, that's what this section is for. Earnest money. So earnest money functions like a deposit. Typically 1% of the sales price is a good amount to put in there. It conveys that you have a strong buyer. This is asking for the escrow agent of who will be handling it. So typically if you have a preferred title company, you already are going to know who the preferred escrow agent is here. So say Bob Smith, and then the address of the title company. And then it's asking for the earnest money amount. So remember, 1% of the sales price is pretty good. So 1% of $350,000 would be $3,500. And now it's asking for how much is the option fee. Typically in this market, $250 is fair. Now the option fee is paid for a buyer's unrestricted right to back out of the deal and retain their earnest money. So typically the option fee goes here, and the number of days of how long their option period is here. So typically 7 days is fair. The option fee will cover the amount of days that the buyer has the unrestricted right to terminate the contract. It's best that the buyer gets their inspections done during this period. Therefore, if they can't agree to terms with the seller on any of the items in the inspection report, they can back out of the deal and keep their earnest money. And they'll have 7 days to do all of that: the inspection, the negotiations, and any amendments executed. Title policy and survey. This is where you're going to pick who pays for the title policy. In this current market, this is summer of 2021, where sellers have multiple offers on the property. Typically, to make your offer more attractive, you would want the buyer to take on that expense. However, this is negotiable. So in this case, it would be Patent Title or whoever is your preferred title company. Now here is another expense possibly. If the overlapping improvements or there's any discrepancies, if you want the title policy to be amended to reflect those, you would select will be amended to read, and then you have to make the determination on who is going to pay for that. Consult your title company representative to determine what kind of an expense that would look like for either the buyer or the seller. 3 options on the survey. So this says that the seller has 5 days to turn in the survey. This says that if they fail to do that, then the title company is going to order a new survey at the seller's expense. This first box also says that if they turn in one and that one doesn't meet, it's not acceptable to the title company or to the buyer's lender, then the buyer shall obtain a new survey at either the seller's or the buyer's expense, and you'll need to make a selection. Now this box says that there's going to be a new survey and the buyer's going to pay for it flat out. And this one says that there will be a new survey regardless and the seller's going to pay for it flat out. So make your selection. Now this is regards to objections. Now this says that the buyer can object in writing if there are any items in the commitment or in the survey that prohibit the use of, say, maybe a shop in the back, or if it prohibits like residential use, you would type in those things, whatever it would prohibit, and then you would give the buyer a set number of days to object in writing. Usually it's 3. That way they can back out of the deal and keep the earnest money if that's the case. Consult your risk management officer if you have questions about this. At Signature, it would be Marilyn O'Neill. Here it's asking if the property is in an HOA, if it's a membership in a property owners association. Typically on the MLS listing, it'll tell you down here if there is a maintenance fee. If it's mandatory, that's typically it's in an HOA. It'll also give you the management company name here and number. So if there's information there, typically it is in a property owners association. Scrolling down, definitely give this other language a read through. Seller's disclosure, this is saying that if the buyer has received the notice, and typically in Matrix, under attachments, is where you can find things like the MUD disclosure and the seller's disclosure. And so here you let them know, okay, we have received the notice, or maybe we haven't received the notice, and only give them a couple days to get it to you. Here, it says buyer accepts the property as is. This is typically what you're going to want to select. Now sometimes buyers might have an objection here and say, well, we don't accept the property as is. Here's what you can explain to them. They do accept the property as is because up here they're paying for an option period. So they accept the property as is, however, they're still going to have a period of days where they can back out at any time. They get their inspections done and they can negotiate repairs. So typically it'll be this box checked off. Because if you want to have the sellers do any repairs or agree to any repairs initially up front before the inspection report, it's going to be very difficult to get them to make any additional repairs, and it makes your offer less attractive. Residential service contracts. This paragraph is dealing with a credit towards a home warranty. So if you put an amount here, it's going to cost the seller, in this case, $550, and that's going to be a credit towards the buyer's home warranty package. Now, if the buyer gets a home warranty package for, say, $500, that extra $50 just becomes a wash. The buyer doesn't get that in an additional check at closing or anything like that. Likewise, if they put $550 here and the buyer ends up getting a $600 policy, then it will be covered up to $550, and then the buyer will be responsible for the remaining $50. This is saying that if the person buying the property or selling the property is an actual real estate agent, or if they have other relationships here, if they own more than 10% or a trust, which the broker sales agent acts as a trustee, then it has to be disclosed here. Closing, at what is the latest day to close? So it says on or before, so whatever date you choose here, say the 31st, if it turns out that you can close, say, on the 27th, that's fine, because this says on or before. You don't need an amendment to change that. You only need an amendment if you need to push this date back. Possession. This is saying when will the buyer get their keys? Will it be upon closing and funding, meaning everybody signs and the money is wired from the banks? Or will it be according to a temporary residential lease, meaning the sellers are staying in the home a little longer and they're renting it now from the new buyers? Typically, you're going to say upon closing and funding. That means when the docs are signed and the money is transferred, the keys are transferred as well. Special provisions, if you're going to put anything in here, I strongly suggest you consult your risk management officer. This can be a little tricky sometimes. Typically, you want to leave it blank. However, if the listing agent is wanting to put anything here, or if you're with the seller and you notice the buyer's agent put something here, reach out to your risk management officer and get clarity on what exactly is being written here. Settlement and other expenses. This is the part where a buyer would potentially ask for money from the seller to go towards their closing costs. So in this current market, if you put anything here, it'll make your offer extremely unattractive, and it'll also probably convey to the seller that your buyer doesn't have the funds to close. which of course increases the risk for the seller, which is why it would be unattractive. So a small note though, if you do in fact put something in this box, if it turns out that the lender only needs 4,000 of this, that extra 1,000 is a wash. So again, it doesn't become a check written to the buyer for an extra 1,000. It's asking how much money of this can be applied to those other expenses, not including their down payment. Again, this is something you probably always not want to put anything here to make your offer attractive, and yet there were in the past markets to where it was kind of common to put in a number there where the seller would contribute towards the buyer closing cost. Now it just kind of communicates that the buyer doesn't have the money to close on the home. So paragraph 22, this is where you select any addenda that are part of the contract. So if there is financing involved, you will need to select this item. If the home is in an HOA, you will need to select this item. And just go through here and see if anything applies. Never ever put MUD disclosure here or seller's disclosure here. Those are disclosures. The only thing that comes close to that is if there's an addendum to the seller's disclosure on lead-based paint. This is for the listing agent to complete. As soon as it is executed, meaning the buyers and sellers both have signed it, should go here. If you're working with the buyer, it's definitely best to fill out the listing broker information. You can find that on the listing itself. Here, the listing agent information's here. If you need the license number, so you could click on this, and then it gives you the license numbers and stuff like that. Same thing works for the agent. And that's how you get this information. Now, if you're working with the buyer, you would choose buyer only as buyer's agent. Now, if you're working with the seller and representing a buyer who doesn't have anybody representing them, then you would select buyer and seller as an intermediary. But typically, it's going to be buyer only as buyer's agent. And of course, you want to enter in how much commission you will be compensated from the listing side. Always put a percentage here. And then this is all for the title company to fill out. And that's it.